Frayne Olson from North Dakota State is our marketing analyst this week. In 2014, U.S. farmers planted 90.9 million acres of corn, 84.2 million acres of soybeans, and 56.8 million acres of wheat. If long-term USDA projections are realized, growers will plant fewer acres to each of those three commodities for at least the next 10 years. We recently talked with Frayne about his thoughts on spring acres for 2015 and began by asking if the analysis was more or less complex with lower commodity prices.
You know, that's a great question, and they're both really difficult because what you're really trying to do is anticipate in aggregate what farmers are going to do, and it changes so much from one region of the U.S. to the other region. And so, you know, we've been spending a lot of time as corn prices and soybeans prices have come up. We're looking for more acres. Where are they going to come from? And obviously with the retracement now, the last several months in both corn and bean prices, everybody's looking at saying, well, where's the cutback going to be? How are farmers going to reallocate or switch acres around?
As you pencil it out, is there a lot that's coming back positive?
You know, most crops are break even at best, and in some cases you're losing money, again, depending upon where you are in the country. At least in the northern plains, the region I'm most familiar with, soybeans seem to be the one that pencils out a little bit easier. But for the other major crops we grow in the region, corn and wheat, you know, you got to be a bit careful. If you can trim some expenses off and hopefully have a good production year, you can still make it pencil, but it's much harder this year.
So what are your expectations about what we could see come spring in terms of which acres will get planted?
Yeah, and of course that's an open debate. I know that there are a couple analysts, private analysts, that are putting some numbers out now. USDA recently came out with some long-term forecasts that they are also trying to get a signal to farmers on what might happen next year. We also have the University of Missouri, the Food and Agricultural Policy Research Institute, FAPRI, also puts together some long-term forecasts that I follow fairly closely. And all of those are looking for a cutback in corn acres, anywhere from 2 to 3 million acre cutback in corn acres, an increase in soybean, anywhere from a slight increase to about a 2 million acre increase in soybeans, depending upon which analyst you look at. And wheat acres to remain about steady, about constant. My expectation, based on what I see up here, is I do think, at least in the northern plains, we're going to have more spring wheat acres.
Because?
Well, mainly because North Dakota and western Minnesota, western South Dakota, parts of Minnesota, northwest Minnesota, we're the transition zone for corn. So as corn prices have gone up and the world is signaling somebody needs to produce more corn, these guys have stepped forward and started raising more corn acres. Now, as prices have fallen and basically world markets are saying we don't need that many acres, this will more than likely be the area that we cut back the quickest. So again, we're the transition zone. As prices fall, we tend to drop our acreage and switch to something else because we do have a lot of different crops we raise up here.
Well, with that said, and you mentioned before that it might be break-even at best at some of these commodities, is it chasing people to alfalfa or to CRP or to some sort of alternative crop?
Yeah, again, and I'll speak to the northern plains first. What we're seeing is a lot more interest in some of what I call the smaller market crops or specialty crops. Again, we raise a wide variety of those up here, and so we can get some shifting acres around that way. Also with, in particular, the higher beef prices and a recovery now in the profitability of dairy, there are some guys that are looking at an increased alfalfa acreage as a roughage source, a feed source for animal agriculture, which is important too. So we are seeing some of those acres shift around, and I think, you know, getting rejumbled as we move forward.
You've been traveling the state talking about prices and the outlook. As you go forward and you see that it is a tight margin, what things could throw a wrench into that?
Well, what I've been trying to explain is that even though right now it looks like we have plenty of surplus, if you look at the world standings, at world stocks-to-use ratio, we're comfortable. We haven't rebuilt them to a level where they're burdensome. And so I'm trying to remind farmers that, you know, essentially we are, as a world, one crop failure away from much higher prices. And obviously the first one on deck for that, the first one we're looking at right now, is South America. And the South American production obviously is critical for soybeans and soybean prices, but it's also really important for corn because Both Argentina and Brazil the last couple of years have been major export competitors for us. So that's one region I think we have to look at very, very closely.
January 12th, we get a slew of reports. WASDE, crop production, the final numbers from this last harvest, grain stocks, and then winter wheat seedings. What are you going to be looking at in these numbers? Frayne, anything specific?
Well, obviously there's going to be a lot of information in all of them. The first thing I'll be looking for is, are they going to adjust any of the harvested acreage numbers for corn and soybeans? There's discussions that might happen. We're also going to be looking for any kind of changes in world demand. Our USDA forecasts for exports, have they been moving up, or are we seeing some adjustments on that front?